Hi, I'm Bert Nussbaumer from macrobeat.co.uk. We had a rather strange week. Nothing really added up. Correlation, or some of the correlations have been breaking down this week, which is usually a sign that the market doesn't really know what it's doing at this point in time. It's some asset classes that seem to trust the Fed, others that sort of have their doubts about the current Fed policy. Obviously, all the Fed speakers, we had a lot of them this week. They all sing from the same sort of hymn sheet. Other than maybe the super hawk, Mr. Kaplan, but he's a non-voter, and so far probably the only one we might have just to sort of ignore at this point in time. We talked about inflation and the Fed last week. I did think they were too dovish at the last meeting. I look at all the PMI prices paid chart, the PMIs, all these sort of price components are just only really going up one way, and they're not just going up, they're just going up a lot at this point. So it's going to be interesting how this is all going to be panning out. We have copper making new highs, we have iron ore making new highs, we have food inflation, we have some wage inflation that is building, that is obviously the sticky end of inflation. So really this word transitory may have to be redefined very soon. This afternoon, we obviously get non-farm payrolls, that's sort of first test for the Fed policy. Anything between 650, 950K would be probably just sort of Goldilocks scenario. And most likely what the Fed, the Fed gets sort of credit for their current policy. If you suddenly get like another very big topside surprise, 1.2 million upwards, which to be honest is not impossible, as we can't really measure the speed at which the hospitality jobs are coming back. So that could suddenly put the Fed a little bit at odds. But we have CPI as well next week, so we're going to have two big events on the US side that may or may not put question mark to the Fed. So it's going to be interesting to see how this pans out. To be honest, I have a few charts for you today. The first one is my most loved topic right now, which is inflation. We do see here the ISM services prices paid versus the core PCE. So as I said, any chart you look at that is outside of the whether PCE or the core CPI or core headline CPI, it's just really pointing to the same picture. Aggressive move higher in inflation. As we said, next Wednesday we have the US CPI, so we're going to see more of that going to come through. And at some point in time, some of the Fed speakers may really start to become cold feet and may start to break with a dovish message. So I'm still cautious that we get the taper message a little bit earlier than the market currently expects. On the next slide, this is the DXY. We sort of failed again, breaking below 91, the figure. This is a sort of, pivot or pre-warning that we could go back to the lows that we have seen. Like I said, a very high print in non-farm payroll would obviously turn everything on its head, and the dollar would rather rally sharply again. So dollar looks soft again, but not out. So I would say the strong data does give the dollar some benefit of the doubt, but clearly the reflation trade continues to add pressure. So we really need a strong non-farm to break the cycle here. On the next chart, this is dollar yen. The only reason I want to show that we sort of held where we had to, 109.60. Obviously, should we get a very weak data today, it would obviously again not be very good for risk, and dollar yen could really start to sort of come off alongside the US yields that have been coming off. A very strong one, and dollar yen could just really accelerate on the top side, and yields will probably rally, and we're going to really continue the dollar yen party on the upside. The next chart, I'll bring that one back, dollar CAD weekly. We finally took out the 2018 low, so the Canada story on the back of the Bank of Canada taper continues. Canada is strong against everything else, so it's really the star in the G10 space right now, and I really see no end to this, even though that we have the double whammy today with US non-farm as well as Canada payrolls. But we may have a hiccup, but I think the trend of a stronger Canada continues. Last but not least, gold has rallied a lot more than the dollar has sold off. Yes, a weaker dollar does help gold higher, but I think there is more to that. And I feel that in gold, the inflation fear is indeed really starting to sneak in. We watch 1836 on the top side, and then 1866, the channel of the multi-month downtrend. So if we just continue to see these sort of inflation data pop up, gold could really be on the run here. Thanks very much indeed. Bye-bye.